What's going on, everybody? Wanted to do a little intro right at the very beginning of the stream for those that will be rewatching this or are in different time zones and will have the opportunity to watch it later. For right now, I'm just going to go ahead and get my chart set up, go ahead and get my order books on, make sure that everything is working with the stream and hardware and equipment and all of that good stuff. So sit back, relax, enjoy the music. For the time being, I'm going to go ahead and grab water, get everything that I need, because this stream, as you guys know, it is about an hour or two long. So bathroom breaks, cigarette, whatever, grab a glass of water, all that good stuff. And we will be starting here in just about 10 or 15 minutes. So in the meantime, if you're rewatching this, you guys can probably skip 10 or 15 minutes ahead. I'll try and add a timestamp after the video goes live for replay so that you can just click it in the description. And in the meantime, make sure that you hit the like and subscribe button. Help me out with the YouTube algorithm. Go ahead and retweet the announcement, whether you saw it in Discord or you saw it on Twitter. Go ahead, share it, show it some love. Make sure that you hit the like and subscribe button, and I will be back here in just about 5 or 10 minutes. Reveal my screen and my chart setup, and we'll go ahead and wait for the news together. And obviously do the favorite commentary of the press conference that you guys so very much enjoy. So I will be back here in just a minute. All right, guys, how are we all doing? Let me know in the chat if you guys can hear me okay. I actually forgot to make sure that my camera settings are right, so just bear with me for 1 second. All right, there we go. Should be good. All right. All right, there we go. Now that I got my video settings right. Another fun FOMC day. Go ahead and make this music a little lower. There we go, just so that's in the background. I'm gonna obviously stop the music when when the FOMC actually starts. Let's see here. Did their stream go live on YouTube yet? It did, which is good, but I have to have it muted for now because otherwise I get a copyright strike because their music is not copyright free. So I'm gonna leave it paused and open in another window for now. And we should be getting our FOMC rate decision, the actual numbers should be coming out soon, but I'm assuming it's probably going to be a 25 basis point hike, or at least that's the consensus here. If you take a look at any economic calendar or whatnot, the previous was 5.25, consensus is 5.5, i.e. a 25 basis point hike. So this is what I'm going to be having refreshed, and I'll check back periodically for this. The number should be coming out in about 4 or 5 minutes or so. So we'll keep an eye on that. Algo is still holding a butt clenching short here. So we'll see how this goes. The long that was very underwater for a while ended up closing at just about break even. It was like less than 0.25% loss. And I think that was just with fees. So it was pretty much break even and then shorted almost near the top of this range. So I am a little confident if we move down to sweep longs that this will be another successful common Venom algo win. But for now, these are the 3 charts that I got up on the screen. So that's kind of what we're mostly going to be watching here. Obviously, global order book for Bitcoin, and then I've got the S&P 500 index and the US dollar index here as well. So as you can see, I was getting trolled for this ascending channel here, which is a bear flag on Bitcoin. I was getting trolled about this, and not quite sure why. The volume is like super low. As you can see, the spot OBV volume is just like really in a decline as the price has been grinding up. Normally that's considered bearish divergence. So we'll have to see what happens with this. Obviously on an FOMC day with a lot of volatility, anything can happen. So we'll have to see. But if we take a look at the actual, you guys know I'm like really big into the liquidation charts. These are High Block Capital. I'm not actually affiliated with them, but if you guys want more information on how you guys can use this, you guys can feel free to go down in the description below and check this stuff out. And I'm watching my stream on the YouTube window, and it seems like it's actually a little bit behind. Usually it's not this far behind. So the stream, from what's happening live to what you guys are seeing, is going to be delayed by I think about 20 seconds. It's not going to be that big of a deal, but we'll just deal with that as it comes here. But yeah, and it's unusually delayed today. I'm not really quite sure why. It's actually delayed by like a good almost a minute. So we'll see how that goes. But regardless, it's all good. Let's go ahead and refresh this real quick. Yeah, so there's a lot of liquidity below us. 28.5, as you can see this gap here in the liquidations, that's going to be acting as a support level, but a very significant amount of 100x and 50x longs below us. So we'll have to see how this works out. On the heat map, this is on the 7-day, and if we go ahead and zoom in here, you can see that big pool of liquidity and then a big gap here right below 28.5. So I am expecting a sweep probably in both directions. We'll probably end up seeing a good amount of volatility. Normally we do on FOMC days. Last week was kind of a nothing burger, or last FOMC meeting, whatever, was kind of a nothing burger. But I'm hoping with the where the liquidity pools are located today, I'm assuming that this will end up being pretty decent, and we'll get some movement in both directions. So we'll see how that goes. Let's go ahead and refresh this, see if the numbers came out. Okay, so the numbers came out, and it looks like we're doing, I guess they're doing 5.5. So there was no difference there. It looks like we are getting a 25 basis point hike today. You can see that by the numbers here. The actual was 5.5, so that confirms a 25 basis point hike. That's why we're seeing some volatility right now. We got a nice wick forming here. We'll crank this down to 15-minute charts so that we can see more clearly what's going on here. Dollars coming down. we'll zoom in a little bit on our charts here, just so that we can keep an eye more closely on what's happening. Okay. So obviously dollar goes down, other things go up, but most of the good juicy information is during the press conference itself, which you guys all love. You guys love the commentary, whether they're good questions or bad questions. I'll denote that. And normally, if it's a more complicated question that most people wouldn't quite understand, that's when I kind of go in and explain that stuff. So lots of volatility right now, as we can see. Huge wick to the top side, and then it retraced. Just really a lot of back and forth right now. So we're kind of gonna see how this goes. Obviously, since the numbers just came out, that's what's causing this volatility right now. And again, I'm sorry for the delay in the stream here. It looks like it is delayed by like a solid minute and a half. So that kind of sucks. And this has been happening more often with YouTube. This is the reason why I haven't been attempting to live scalp these while they occur more recently, is because YouTube has just been a lot of delay. And I don't have a VPN on or anything right now. And it's still delayed by a solid minute. So that's kind of a little problematic here. So you guys are seeing this price action. If you guys have the chart up, you guys are seeing this price action live. But if you're just watching it on screen, it's about a minute behind. So very interesting price action so far, but still just range bound. I'm kind of really hoping to see some kind of a validation or invalidation of this bear flag here that we have on Bitcoin, or proposed bear flag that we have right now on Bitcoin. So we'll see how this goes. But welcome to everybody just joining. Appreciate you guys. Like and subscribe to the video. I live stream every FOMC. I have for the last year and a half, as well on Fridays. So I will be streaming again on Friday night at, I guess it's 9 p.m. Eastern, 8 p.m. Central. So we'll do that. Just kind of recap the week, we're going to get, probably some fallout from the FOMC. And then I think we're getting some numbers coming out later on in the week as well. Let's see here. We're getting continuous jobless claims, initial jobless claims, and personal consumption expenditures, as well as pending home sales. So that's going to be more interesting numbers that are going to be coming out tomorrow. And then on Friday, we get core personal consumption expenditures and personal consumption expenditures, which is also going to be big numbers. So from here on out for this week, we should be getting some pretty good volatility from here on out, considering the numbers from the FOMC. So very interesting week. Kind of a slow start to the week. That's why the price action has just been, in general, really choppy and just kind of sideways, back and forth, tons of wicks. I mean, you can see that here, especially on Bitcoin on this 15-minute chart, just loads of volatility here. The algo has been handling it great. It hasn't been flip-flopping a ton. And, losses, have been either minimized or completely mitigated by, it closing the way I've designed it to, if it's in a loss or whatever, to, try and minimize that and, close out at break even or for a very minimal loss. That's kind of the way it's designed. Real big promo for that going on right now. If you guys are interested, obviously that runs on Astrobit. Description below. Bing50 is a coupon code, 50% off your first 2 months. So I know, shameless plug in the middle of the stream, but we're just kind of sitting here waiting for this conference to start. And I believe that's going to be in about 20 minutes. So got some more time to just kind of observe the price action here, kind of shoot the shit. I'd love to hear, your guys' thoughts all in the chat. If you guys have the time, or if you're at work or driving, obviously don't, go away from your work or stop looking at the road for the sake of, chatting in the YouTube chat. But if you guys get a chance, I certainly appreciate hearing your feedback, your thoughts. What do you think do you think Jerome Powell is right by doing this? Do you think he's a little bit behind and that there's a lot more work to do and they are more hawkish today? Do you think that they're going to be less hawkish today? And, we see the price really invalidate this bear flag and just really skyrocket and stop out our short position on the VENOM algo? Or, what do you guys think? Let me know. But yeah, very, very interesting stuff coming up this week, especially with all those numbers I just mentioned. And it's definitely going to be very interesting. These streams are always a little more popular too, by the way, than the Friday live streams. But regardless of that, make sure you guys tune in on Fridays. I normally do a recap of the entire markets, not just necessarily in Bitcoin. Sometimes I also get a chance to go over some, commodities and Forex stuff as well, because in my own personal trading, that's why you haven't really been seeing me trade very much lately. I normally trade less during the summer anyway, just because, the kid is out of school and, it's nice outside. I like going to the pool, going to the water park, spending time with the family, going out to eat and stuff like that. So in general, I trade less during the summertime. The trading that I have been doing has been in, my own personal, like IRA accounts and stuff like that, and Forex. That's kind of where I've been focusing. I mean, if you guys want me to be sharing those trades, or at least like sharing the setups that, I'm looking at getting into or have entered, and sharing those on Twitter for you guys, let me know. I don't have my own Discord. I don't have a Telegram. So if you guys see anything like that, please report it and let me know. That's definitely a scam. The only Discords that I'm in, that I'm like really, really active in is Cam Paulding's Crypto Kingdom and the Astrobit Discord. Sometimes I'm active in Austin's Wolfpack Discord, which is new for him. He's a very active prop firm trader, and I believe me and him like share each other's YouTubes like on our main YouTube page. So make sure that you subscribe to AC Trades as well. Big shout out to him. He's a really good trader. What do you think has to happen to get Jerome Powell to stop hiking? I think we need to see inflation go down year over year to like at least 5%. Me personally today, I think during the press conference, he's going to stay relatively hawkish, to be honest. I really do. I mean, when inflation year over year and the CPI numbers come out, it's like, oh yeah, the CPI numbers are cooling off by 0.1%. That's nothing. I mean, literally 6 months ago, inflation was at 8.5. It's still at 8.1. Now that may have changed. Obviously, we're going to have updated numbers during the presser when he makes his official announcement before he takes questions. But I believe last time it was still at like 8.1. That is crazy high. And if you look at the numbers that aren't included in core CPI, like food and housing, which are not included in those core numbers, those have actually been going up still. And you can see that at the food stores. You can see that in the rent prices. You can see that in the mortgage rates and in the mortgages and new houses being built and everything. With the housing economy slowing down and food prices still going up like crazy. If me and my wife go to just a drive-through at McDonald's, I mean, it's nuts. Like the amount of money that it costs, for like 2 medium Big Mac meals. We're going to a drive-through and we're spending $25. I can go to a restaurant and eat way better quality food and pay $5 more and have it served to me and sit down in a nice restaurant and watch TV and have a beer. And it's only like $5-10 more in a restaurant than a drive-through for fast food is. I mean, like, that's insane to me. Like, it's nuts. Eggs are still like $5 a dozen, gas is still like $3.45 a gallon. Rents are still crazy high. It's nuts. Like, the inflation, they can show us all the numbers we want, but for average people like you and me, especially here in the States, there's a freaking fruit fly or a gnat or something in my office. Sorry. We can see it, like the prices at the pump, the prices at the food stores, they're not going down. If anything, they're still going up. And, that's what affects like real people in the country is, unfortunately, the government and the people getting paid, 6 figures and millions of dollars a year to share information with us. Half the time we don't know if it's true. And, they're just very out of touch with how things are going here. So it's looking like we're getting a big wick here. Lots of back and forth so far. The meat of the information, again, like I said, is going to be during the actual presser. I don't think I ever even retweeted the fact that I was live. So let's actually do that now. Hold on a second here. I had a really good AI generated picture of Jerome Powell sitting by himself at a bar with a glass of whiskey. And I really want to put that on the reply that I make, but I can't find. Damn, can't find the image. I have a very large meme folder. Why can't I find? Cannot find the image. Well, it's pointless for me. Oh, here it is. Found it. There we go. Join in, Anon. If you guys are on Twitter, you guys can see that. You guys can see that post. He's like sitting with a whiskey at the bar. It's really funny. I don't know who AI generated that, but I remember I stole that one. It's pretty good. Funny little picture there. I personally think that Powell is fighting a losing battle right now. We've already spent virtually all the $1 trillion we just printed. The government virtually refuses to cut down on uncontrolled budgets. I mean, not to get like super political here, but that's like typical Democrat things. They're not in, they've never done this, right? Like, I mean, at least as long as we've all like been alive, or at least old enough to acknowledge and see these things happening. They're not in the camp of cutting taxes. They're not in the camp of restrictive spending because they're not conservative. That's literally the antithesis of Democrats, is because conservatives are conservative. We want to spend less. We want to spend less money on wars. We want to, not place our military all around the world and kind of, spread it too thin. Those are all conservative things, is like spending less money, less government, less restrictions and policy, less spread thin military. They are not in that camp. And Biden has said it himself. He has absolutely no plans on doing anything in terms of cutting taxes or, stopping spending and stuff. It's very unfortunate, but unfortunately, that's the way that it's going. That's not the camp that he's in. So that kind of sucks. And I actually just realized that, oh, wow, look at this. Holy crap. So are we going to see a big fake out here? It looks like now is what we're getting the volatility, because the announcement has occurred on like on Twitter and stuff. I guess the word is getting around now. Unusual Whales posted, the Fed raised its funds rate by a 0.25 percentage point to a target range of 5.25 to 5.5%. The midpoint of this range would be the highest level for the benchmark rate since early 2001. So that would be after the fallout from the 2000, the Y2K and the year 2000, like 1999 tech industry bubble burst. Okay. So again, another huge wick here to the top side. Huge wick here to the top side. And honestly, the dollar, this is also forming a channel here. I mean, like this is a pretty clear channel here to me. Doesn't really matter how you want to draw it. You know what I mean? It's a very, very clear channel or some kind of a wedge here. This is technically bearish. So we'll have to see how this ends up playing out, but very confusing to me. Normally, hiking rates ends up making the dollar index go up, not down. So very, very confusing here what's happening. Kind of it's always been inversely correlated to Bitcoin, but right now it's kind of inverse correlated towards the actual news itself. So maybe this is lagging behind a little bit. We'll have to see. And I did also just note that my stream actually isn't super delayed. However, my what I was watching on my YouTube live thing was actually it just wasn't pushed all the way forward to live. So it actually is not that far delayed. I think it's only delayed by maybe 10, like probably a half second or 2 seconds or something. So it's actually not too bad, which is good. Welcome everybody here that's just joining in. Make sure you smash the like and subscribe. I always say smash. It's like I feel like it's such an overrated term or an overused term now. But if you would be so kind, help me out with the YouTube algorithm and subscribe and like the video. That always helps me out, especially if you're a new user. I notice a ton of you guys join in the streams and stuff when I do FOMCs and on Fridays when I do the beers and Bitcoin stuff. And like 90 or 85 or 90% of you are not subbed, which is kind of crazy. Get those notifications so you guys can tune in. All priced in. Nobody's surprised at the 25 basis points. Yeah. And I think the main reason for that is last meeting, he did say that, you know, we still got another 50 basis points to go before the end of the year. So he did a hawkish pause last meeting and they did nothing. This meeting, obviously, they just hiked by 25 basis points. Now, that leaves next meeting as a giant question mark, right? So we don't know if he's going to do another 25 and just get it over with, or if he's going to do another like hawkish pause, wait to kind of see what ends up going on, and then do it later on before the end of the year to meet that 50 BPS thing. But again, he's been going meeting to meeting on this, so we're going to find out. This is why the press conferences are so important and interesting, is because he provides more clarity on what his thought process is for this kind of stuff going forward, which is, you know, that's really important. You know, that's definitely an important thing. So yeah, we had that big wick to the top side, and now it's basically fully retraced more than 50% from its high. Kind of crazy what's going on with the price action. So, you know, we'll have to see obviously how this all plays out. Bitcoin is going down, dollar is trying to spike up a little bit here. So, you know, we'll see what ends up happening. And again, you guys also have to remember that the S&P 500 and the US dollar index, since I don't trade these indices on anything that TradingView charts, and I do it from like Fidelity and my IRA account, I don't pay for the live data for this stuff. So this stuff is delayed by like 10 minutes. Bitcoin's obviously live, but these two are definitely delayed. So how delayed is it? Does it tell me? I don't think so. I know that it is delayed though. What happens if I go like this? No, it won't. It just doesn't tell me. It is what it is. Boop that sub button. Kick the like. Hell yeah. Appreciate it, Jeremy. I was going to start doing like exclusive streams and like start doing like a sub, like for my YouTube and everything, and do like special streams for members. But currently right now, like I'm in the process of like studying for certifications and stuff. I just don't have the time to dedicate to it that I want. So I haven't gotten around to offering that yet, but let me know in the chat if that's something that you would be interested in. I don't have the time to do like my own Discord or my own Telegram or pay mods to help and other people to post content. But I was thinking about doing like once a week, like exclusive streams for like members and stuff for like $4.99 a month. You know what I mean? Like something cheap that makes it worth my time and, you know, would be valuable information for, you know, the $5 or whatever. Give me 1 second. I'm actually getting a very important phone. Hold on 1 second here. Hello? Speaking. Oh, hey, how are you? I'm doing very well. Yeah, that was what I had done all of the stuff for. Yeah, because I had completed all of that stuff back in 2020. So um, when I got a hold of the courts and stuff, I'm actually going to have to fly back from where I live, and it's going to be a very expensive process for me to do all of that stuff through the courts. But in preparation for that, V as in Victor, ANTINE. Yes, ma'am. Basically, in preparation for that, I was just looking to see, if there was some way for you guys to, email like a PDF or a scan or something of like some kind of completion document, just so that when I fly there, I don't have to stay extra time to get that kind of stuff, so I can have it prepared for the court. Yes. Yes, I relocated to Kansas City, and it's been 5 years on the 27th this month since the conviction date. Correct. Okay. Hey guys, I am super sorry about that. That was a very important phone call. There's been an issue with my license in Virginia, and I have to actually go back and do stuff.
Raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
So it's going to be meeting by meeting still.
We've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Sorry about that, guys.
Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape.
Oh my God, this girl.
Is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but doing performing well this summer.
People are paying for their Taylor Swift concerts with credit cards.
Inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of
Oh my God, if I hear soft landing one more time, I'm going to blow my brains
I would
out.
say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS looked good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to
Whoa, somebody tipped me 40 bucks?
To achieve a stance of policy that's
Crazy traders. Hey man, I really appreciate that.
At the last meeting, we wrote
Tipped me 40. Appreciate you, buddy. That's awesome. I don't think I've ever gotten tipped on my YouTube channel before.
Was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations. And as a result, we went ahead and took another step.
Dude, the dollar is just nuking like crazy.
I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
It doesn't sound like he's hawkish or dovish. It sounds like he's neutral based on numbers we're going to get.
Widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter. And that by September, that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard
Low
to
trend
pick the
growth.
pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Chris.
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you are really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. We
Down at 3.
I'd say it this way. It's really a question of how do you balance the 2 risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think, that's core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last
So
1 point?
it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And, we hope that that's
In other
as
words,
little as possible.
unemployment will go up. And to be
that is
honest
the
with you
likely outcome.
guys,
The worst
3.6 or
outcome for
3.7%
everyone, of
unemployment
course, would be
is the lowest it's been
to
since the
deal with
60s.
inflation
That is
now,
incredibly
not get
low.
it
It
done.
needs to rise.
Whatever the
Some people
short-term
just
social
need to
costs of
lose their
getting
jobs.
inflation under control.
That's just the way it
longer-term
goes.
social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
Go to Michael McKee.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition,
And no
should
one's
you be
talking about
restrictive
the
enough
all-time
right now
high
under these conditions?
U.S.
Do you think
American
you might
consumer
need to
credit
do
card
more?
debt,
Because I'm curious about what you
which is
see
almost
as
$1 trillion.
inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say,
He's not cutting
again,
rates,
the broader
bro.
picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth.
Credit card
remain at
debt
moderate
in the
or
United
modest
States for
levels.
American
These
consumers is at
inflationary pressures.
$986
We want to see
billion.
continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary
Let's,
pressures.
get
And
one
what
of
we
these.
see is we see those pieces of the
at
puzzle
this.
coming together.
That is
and we're seeing
insane.
evidence of those things now. But I would say that what
And the
our eyes are
unemployment
telling
rate
us that
is
policy
way
has
down
not
at
been
3.6.
restrictive
is
enough for long
insane.
enough to have its full desired effects. So we intend, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think,
He
today's
just
rate
said
hike was
no, and
appropriate,
he's taking it
if
meeting
we're
by
gonna be
meeting.
Looking at the incoming data to inform our decision at the next
They
meeting.
keep
about
asking the same
what
question
is the
over and
incoming
over,
data
like, what
telling
don't you
us that we
get?
need to do more? And
We're
if
going
it
meeting
does
by
tell
meeting.
us
We
that
have to take the numbers as they
that's our
come.
view, then
Like,
we
what
will
don't
do
you guys get? Come on.
Colby.
Very simple. Don't waste this
Thank
man's
you.
time.
Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down, the point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think that's, I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well?
I think we're going to, I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that, and I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. We also, I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be
87.39 million long. That definitely gets swept. There's another big one here for
The
82.
length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved, repeatedly, has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data, and given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and below, heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard
because
to
people
tease
have
out
already
whether
maxed out all their damn credit cards, and they can't get more credit cards from their banks.
The picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
And that's for everything, not just credit cards. Personal loans,
Chair
business
Powell,
loans,
Rachel Siegel
lines
from
of
the
credit,
Washington Post. Thanks for taking our
everything,
questions.
mortgages, the whole 9 yards.
Break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year.
Yeah. So, interesting question. So, let me start by saying that the inflation surge that we saw.
It was a good question from her. Normally she has the garbage questions.
A collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the reversal, the beginning of the reversal of spending back into services and away from goods. Say, take autos as an example, the combination of an increase in sales and inventories while vehicle inflation has decelerated points to a substantial role for supply. But there's also a role for demand as, you know, the loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. You know, I would say monetary policy is working about as we expect, and we think it'll play an important role going forward. In particular,
But as he's saying, there's still like tons of work that needs to be done here. Just because it's slowing down doesn't mean that the problem is solved and we magically go down to 2%,
both of those,
you know, inflation or whatever in 6 months. Like, that's not the way that this works. It's going to still take
And just to follow up,
years
do you think that
to get
of
to
those
that
two
point.
sources that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing.
But how do you keep the inflation in check when Congress is just like spending money unchecked?
Sector.
They've already blown through another, like they already printed another $1 trillion. Like, how do we mitigate that?
Choice of tie. So thanks for taking our question. So the Beige Book, it said input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
Well, I think as it relates to goods, it's really an indication that supply chains and shortages are easing. And so what was the first part of it?
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's.
I agree with Drive with Bishop. Cut the fat.
Have actually been gradually
or
moving
split
down.
it open.
They're still at levels
100% agree.
That would be consistent over a long period of time with 2% inflation. Nonetheless, we're making.
Which is why it concerns me that he's so like, well, we might hike, we might pause, we might do this, we might do that. It's like, no. Don't give us maybes at this point. Like, are you on the path to 2% long term and we're going to keep hiking rates
You can look at
every meeting or every other meeting
in the
by smaller amounts?
survey has, you know, it's
Or
still at
are we
level
done
that
and we're
was
just
really
keeping rates higher for longer, and then
for most of
by the
last
time
2
next
years.
year
So
hits, they're going to
you
start
see
cutting?
cooling, particularly in private sector in the last,
He's being
you know, in the last report.
He's
So
being a lot more
you see
vague in
that,
this
and
meeting
it's
than I would
happening at a
like him to
gradual
be,
pace.
to be
So
honest with you.
That's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the
Of course, there's a push to raise minimum wage because wages aren't keeping up with inflation.
And we have the
That's not bullish. That's
Are you
bearish.
concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job,
Yeah.
not our role. You know, we monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level. And
Wages are going up because they need to keep up with inflation. People need to get paid more to be able to pay for shit. And that's why
Hi,
it's
Victoria
going
Guido
down
with
very
Politico.
slowly
I
because
wanted to ask
producers and
about the
manufacturers
S&P,
knows that they can
which
sap
suggests
us
that
for
you
the
would
money.
cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the
What?
level of inflation what's sort of important there as you think about getting to 2% and when you might
You're an
start cutting
idiot.
rates?
He's not
Or is
cutting
the
rates
speed at
anytime
which
soon.
Inflation is falling also important.
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would
Oh my
depend
God,
on
this
on the
lady.
whole.
Are we going to start cutting rates
Things. And
soon?
when people
No.
are writing down rate cuts
The fuck?
next year, you know, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle.
Yeah,
let
he
alone the
can't
next
say right
year,
now, oh yeah, we're going
or
to start
the year
cutting
after
rates
that.
next
So
year. It's way too soon for that
it's
talk,
hard to say
lady. Come
exactly
on.
what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates?
I'm not saying that at all. I'm not giving you any.
He's not going to comment on that. What are you getting at? See, those are the kind of people that are sitting here that are like,
that won't be this year, I don't think.
Really?
It would be, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how
a
confident
full.
we are
He said a
that
full.
inflation is in
Notice
fact
what he
coming
just
down
said. A
to our
full
2%
year from now. That's next July. That they will consider it.
A good part of Wall Street has become more confident that
These people.
the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for recession.
Soft landing. I should be taking shots every single time one of these guys says soft landing.
Being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
Oh my God. And there it is again, double shots back to back. Jesus.
That we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances. Do
you guys realize that even if the unemployment rate goes up to
that's been my view,
shoots up like a whole percent,
still my view.
It's not even that serious.
And I think that's sort of
like
consistent.
normal unemployment rates are like 4 to 4.5. Like that's normal.
And
that's like the median over time is like 4.5.
See that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make. Informs our deliberations, helps us make, I hope, better decisions.
He was reading that answer. I felt like that question and answer was scripted.
And you still have a strong labor market. I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say though that
I wouldn't use the term optimism. That's hilarious.
We've seen so far.
J Pow, man, you're killing me.
Without any real costs in the labor market, and that's a really good thing. I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions. And consistent with that,
Drive with Bishop is right again.
You would have some softening.
The word soft landing has been a buzzword ever since Janet Yellen at the Treasury hearing
as we
Congress.
Go forward with this process, but it's
100%
that we haven't really seen that. We've seen softening through other
Drive with Bishop's on point. He knows what's up.
We've seen softening through, job openings coming down part of the way back to more normal.
Here's the other thing.
The quits rate.
If there's tons of job openings, but the unemployment is super low,
participation,
how the fuck do you fill the jobs?
Labor supply.
If everyone's already working,
which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Jeff.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down?
Drive with Bishop said it for me. Open borders.
Do you need to see that will
and that policy is going to very quickly come to an end after the presidential
election.
election.
How far need to go before you're willing to kind of?
It's good to have immigrants. Immigrants built this country, but at the end of the day, you can't have completely open borders and unchecked people like coming in. It just doesn't. It just is a recipe for disaster. It has to be limited, and it has to be tracked and organized, and these people need to be documented and, like basic vaccinations. I'm not saying COVID, I mean like malaria, measles, mumps, red fever, scarlet fever, malaria, shit like that. like,
the federal funds rate is at a restricted
they have to
level.
have real
So
names
if we
and
see
some kind of
inflation
real
coming
documentation.
down
Like, you can't just have
credibly,
millions of people flowing across the border
sustainably, then
unchecked.
we don't need to
It
be at a
doesn't. It's
restricted
never going to
level
work.
anymore. We can move.
But
back
immigrants
to
built this
to a
country,
neutral
and
level,
yeah,
and then below a
those
neutral
people
level.
get jobs.
So
They come
I
in
think we
legally
would-
through the borders. They get green cards. They get work visas. Whatever. Yeah, put them to
Very
work.
careful
Fill the
about that.
jobs.
We'd really want to be sure
That will help the
inflation is coming
economy.
down in a
I'm
sustainable
not
way.
arguing with
And so
anybody
it's
on
hard to
that,
make-
but having them
I'm
come
not
in
gonna try
completely
to
unchecked is a
make
disaster.
numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until, all the way back to 2 until 2025 or so. So.
See, look what what did I just say? 2025. It's still going to be another 2 years before we get back to 2% inflation.
Thank you, Chair Powell.
You're telling me that the
Jennifer
economy is
Schauffer,
not going to go into a recession in the next 2 years when he's going to have to keep pausing, hiking, pausing, hiking? No way.
Failed. When you look
It
at
may be a
credit
soft
conditions
landing, but-
now, given Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point? And how does this play into your outlook for policy?
Wow, Big Bull just got liquidated for almost $1
On a
million.
particular merger proposal, but I will say, things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking
Well, yeah,
sector
of course.
profits generally are
The
coming in strong
administration
this
just
quarter.
printed $1
The
trillion.
overall banking
What do you
system
expect?
remains strong and resilient. Of course, we're still
Yeah.
watching.
Because the bigger banks have been acquiring the smaller
carefully
banks and
monitoring,
buying their debt. That's why it
monitoring
remains
conditions
strong.
in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the
Dollars
turmoil in
pumping,
March
everything
than
else is
others.
nuking.
It's very hard, as I mentioned. it's
Crazy
very
how
hard
that
to
works,
sort of
huh?
Tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other
Wow,
banks.
look at this massive
The
scale.
SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is restraining economic activity. So that's how I would look at it.
And how is that informed?
Some people need to go broke, lose their jobs, lose their mortgages.
That is an
Uh-oh.
expected result.
Are we
of
getting a break in the
tightening
channel
interest
here?
rate policy is that bank credit conditions bank lending conditions would tighten as well.
That's a huge
And so
amount
the
of
question
bearish volume.
Is it more effective this time because of what happened in May? I just don't think we know that. I think we're looking at the current data in GDP.
I think we're about to
we're seeing
sweep
strong
the longs,
spending, we're
come the
seeing
other
strong
direction.
economy,
I think that's
and
what's
it's
about
made
to
us
happen here.
confident that we can.
Yep,
go
we're starting
ahead
to
and raise
sweep
interest
longs.
rates now for the
See
third
this?
time since the March events.
We swept the 100x shorts with this wick up here,
It seems like
and now it's
the
coming right
economy
back
is-
down.
is
We're going to start
weathering
sweeping
this
these longs
well.
down here, which needs to
But Of
happen.
course, we're watching it carefully.
Longs
and,
have been offsides, and they're offsides still
expect
by
to
about
continue to do that.
5 billion. Very interesting. Hey, look, short
Chair
for the
Powell.
algos in
Thanks for taking our
profit, barely,
questions.
but at
Megan
least
Casella
it's
with Barron's.
back in profit.
I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well,
Very
wages
good
in excess of
question.
Inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages will.
with the
inform
phone calls
cause
during
of
the stream,
inflation
guys,
the
I am
first
so
year or so
sorry.
of the outbreak.
Oh.
But I would say that
He hung up.
that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important part of getting inflation back down, and that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there?
Get
of
prepared
why
and don't
continue
live beyond
to
your
keep,
means.
Rates elevated or to raise them.
Well, we have
Like
a
that post
job
on Twitter.
assigned
Don't buy a
to us
house
by
that has a
Congress to
$30,000
get
a
inflation
month
under
mortgage.
control. And
Don't do
we think
dumb
that
shit like
the
that.
single most
Don't buy a
important
$5
thing
million
we can do to
house
benefit those
and
very
then
families,
think you're
especially
good
families
when
at the lower
unemployment's at
income
all-time lows and you
is
know
to
it's
get
going to start coming up
inflation
over time. You might
sustainably
lose your
under
job
control and restore price
and
stability.
capitulate on that
We think
mortgage.
that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel, or transportation costs, heating costs, clothing, food, things like that, those, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle-class people have some resources and can absorb inflation. The people in the lower end of the income.
Are you kidding me? The middle class is getting crushed right now. You closed all of their businesses 3 years
The
ago.
record is clear that if we take too long, or if
They've already blown through their
don't
savings. The middle
succeed,
class
that
is getting
this pain
absolutely
will only be
demolished
greater.
with all
So
this right now.
That's how I would explain what we're doing.
Thank you, Chair Powell. Simon Urbanovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event, the market had assigned a roughly 99% probability to the rate move that you announced today. The decision was, of course, unanimous, and the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, was there doubt? Look, I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that. There's a range of views about what we should do at this meeting and what we should do at the next meeting, and it's a process that we go through. Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and
That was kind of a waste of a question. Like, is there doubt about what you're going to do before a meeting? There can't be any doubt. These guys are literally in charge of what happens with our economy. Come on, man. With The Economist? Don't sound like an economist to me.
Financial conditions have been loosening at a fairly steady clip in recent weeks. The dollar, the stock market, et cetera. What does that mean for the Fed in being sure that inflation will come down to target?
So we monitor, of course, financial conditions.
Because they're going to
broad
keep rates
financial
higher for
conditions.
longer. He
You're
said
right,
the
it's
same thing like
dollar and equities, but
10 meetings in a
we're,
row.
of course, very focused on rates and our own policy. We're going to use our policy tools to working through financial conditions to get inflation under control. The implication is, we will do what it takes to get inflation down, and in principle, that could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing, and ultimately, over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
So that could happen. The question is that consistent with, so if you think about both of them as normalization, imagine it's a world where things are okay and it's time to bring rates down from what are restricted
Imagine a
levels
world
to
where
normal
everything's
levels.
okay. Dude, trust me, Jerome. We've been imagining
Normalization in
it for the
case
last 3 years.
Of the balance sheet would be to reduce QT. So to continue it, you depending on where you are in the cycle. So there are two independent things, and really the active tool of monetary policy is rates, but you can imagine circumstances in which it would be appropriate to have them working in what might be seen to be just different ways, but that wouldn't be the case.
Yeah, you can't tighten and raise at the same time. What the hell?
I have a question about the discount window. I'm wondering if since the bank failures of the spring, if you've seen signs that banks have taken more steps to be proactive in assuring that they're ready to use that facility if they need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as
That's
you know,
really important
during
what he
the,
just said.
Events of March, and that that it's a little clunkier.
He's encouraging the banks
clunkier
to
and not
use
as
the
quick
discount
as
window.
as it needs to be sometimes. So why not?
That
be in a
definitely
situation
affirms
where you're just much
higher
more
for
ready
longer.
in case you need to access the discount window.
Let's go to Mark. Cameron?
Mr. Chairman, Mark
Good or
Hamrick
bad?
with Bankrate. You've talked in the past about getting the housing market back into better balance, excuse me, and also that the market might have bottomed. Where do you see that situation and balance, or lack thereof, right now, particularly with the constrained inventory of existing homes that might otherwise be coming onto market at a time when existing homeowners are reluctant to move? And of course, all of that happening with the 30-year fixed-rate mortgage still around 7% on the heels of Fed tightening, and with what you're talking about, tightening industry lending standards. Are we getting closer to balance or farther away? What's your sense?
I think we've got a ways
He
to
never
go to
said
get
that the
back to
housing market was
balance, really,
bottomed,
for the
bro.
reasons that you talked about. With existing homes, there are many people who have low-rate mortgages, and whereas they might want to sell in a normal
No one's moving
situation,
with a
they're not going to
locked-in
because they have
mortgage
such-
rate
so
of
much
like
value in their
2 to
mortgage,
4%.
which
No
means
one's
that
leaving that
supply of
house. If it's a
existing
home
homes
to
is
live in,
really,
no
really
one's
tight,
selling
which is
that.
keeping prices up. On the other hand, there's a lot of supply coming online now, and there are people coming in. A lot of the buyers are first-time buyers coming in at buying it with these with these relatively elevated mortgage rates. But I think this will take some time to work through. Hopefully more supply comes online, and we work through it. We're still living through the the aftermath of the pandemic.
3 years later.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments of grain, safe passage through the Black Sea, and alternative routes at this point could be closed off. Just
Dude,
wondering,
who is this
how
absolute
could that
Chad
contribute to
drive
higher
with
food
Bishop?
prices and
That's
inflation
like,
generally, and how closely are you
man.
watching that?
We are watching it, of course, very closely.
Where's this guy
You're
on
right,
Twitter?
the
Holy shit.
Withdrawal from the Black Sea
He knows
grain
what's
initiative
going
does
on.
raise concerns about global
What did
food
he short?
security, particularly
46.21?
for poorer countries that import a large share of their food.
Or are you
Grain
looking to
prices
short
did go up
46.21?
on this news, but they remain well below their peaks
I think you're
of last
looking
spring.
at shorting
And the moves that we've
46.21.
seen so far, I would say, are not expected to make
Yeah,
a
top and
significant
drop. A boost to the
contribution
top
US
side and then
inflation.
nuke it.
Of course, we will be watching that
Probably
situation
one more boost.
carefully.
So you don't think it would have a big
I
effect
agree.
on Fed policy?
Total Chad.
Doesn't you wouldn't say so looking at what we know now.
Thank you.
Thanks very much.
Oh, is that it? All right, that's it. All right, so there's a couple things that I want to go over. First of all, the first thing that I want to look at is like, holy crap, look at how these trend lines have been respected this entire time. Closed above, a wick for liquidity, closed right back below, so no two candle confirmation of an invalidation here. Tap the bottom again. Just really, really choppy today. So while it's been decent price action for like super small time frame scalping, like oops, like on like 3-minute time frame, right? Like if you were short here, you got knocked out. That was a liquidity grab. If you longed here again on the double bottom retest here, you made a quick profit, potentially shorted this bearish hammer, made a nice profit there. But in general, like I don't really trade ever that low. 15 minutes normally the lowest that I ever get. So still going to be tracking this very closely. Even on the 15-minute here, I am starting to see some kind of small divergence forming on the MACD, but it's only on the MACD and it's only on the 15-minute time frame. While in general, the 1-hour time frame's volume is still relatively low, with all of the volatility and stuff, we have seen a huge boost in the actual like momentum and stuff, which is what the MACD tracks. But in general, you can see this just still steadily declining OBV with the steady increase, slow, choppy grind to the top side, with the OBV just slowly grinding to the downside. So that's definitely something to be watching. Normally the hour time frame and higher is going to give you your best picture in terms of like an hour time frame will give you a good look into like the intra week. Same thing with like the 4-hour time frame. I mean, if you look at this, it's just extremely choppy here on this 4-hour. Tons of wicks to the top and the bottom side, tons of fake outs, liquidity grabs, and all of that stuff. And if we make this bigger, let me just make this bigger. If we make this bigger here, we're getting a different read here on our OBV. Okay, while we're getting that lower high that's consistent, we're also getting a higher low, which is also consistent with the price action. So, same thing on RSI. Same thing I'm sure on MACD, unless I'm wrong. Lower low, lower high. Yep. So still consistent there too. Very, very weak volume through here. So very, very hard read on what the price action is going to do. And you also have to take into account where our actual order blocks are, right? So we've got this July high up here, which was our overall 4-hour range deviation to the top side before we dropped. That high is at 31.8. Our previous range high, which was swept by that, was 31.5. Okay, so July high 31.8. Our July low was just put in recently. I guess this was on the 24th, so 2 days ago at 28.861. Since then, we've rebounded and we retested bearishly so far these previous range lows at 29.5. Okay, so 29.5 is acting as resistance here. And then, your overall main resistance is obviously, up here, basically 30K. Okay, so that's kind of what I'm paying attention to right now on these higher time frames. Technically, we did break the lows. Everybody is extremely bullish here for some reason, when in my opinion, it looks like even if we do get a pop, it's looking to me like we're probably gonna, on the higher time frames at least, put in another lower high, and this isn't done yet. Now, if we go ahead and we measure for more clarity here, let's just go in and do that real quick. What are we at? Okay, so we hit our 382 exactly. Technically, if this is like a wave 5 move and this is a 1 and this is some weird fucking 2 wave, then technically this could be bottom for the move. But I don't know. I'm having a hard time with the actual price structure itself kind of seeing that here. We were ranging for a very long time and only just broke down from this range. If this was the actual bottom and we were going to be bottoming at the 382 fib here, and I guess some kind of weird technical area, which I guess if you look back towards here, and in here, I guess technically that's a technical area. Do we have anything? Maybe, I guess. I don't know. I don't know. It just doesn't look. This doesn't look bottom to me. Like normally when you get a bottom, you get some kind of a springboard effect, right? And we just haven't really seen that. Let me redo my screen here so that we can get all of this fixed up here on my screen. There we go. Normally when you get a bottom, you get like this, right? Like you get some kind of a springboard effect. Now, sometimes you get something like this where it's like a big V-shaped recovery, but then it fizzles out and you don't break that high and you end up forming a double top like we did back here. And we've seen that multiple times, right? Like here's another example, right? Like we came down, we broke down, we got a V-shaped recovery. We didn't even come close to up here. We rejected. We got another V-shaped recovery on that move, rejected. We got this like double bottom here and we springboarded, but then it turned into a triple top here, here, and here, and it rejected again. We got a throw under, but we didn't break the lows from over here. We got a huge springboard and broke the highs, but we couldn't make a close above here. So it rejected once again. Same thing happened here, right? We got a slow grind down. We got some kind of a flag here, big V-shaped recovery, double top, and a rejection. And then all through this, like especially through here, right? Like we had a low, we had a higher low here, then we got a lower low, then we got another lower low. And then finally, we ended up getting a V-shaped recovery, closing above this high, consolidating a little bit, making a bull flag, and springboarding. I don't see any kind of movement here like that yet. It's been extremely slow and choppy as of recently. And this does not look like a bottom to me. Nothing's like if we were going to see something like that, then when we came down here, we should have springboarded immediately, right? Instead, we didn't. We hovered around the same area, bottom, 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 bottom. And then we got 2 double tops and another, and now we got a lower low. Okay. So, you know, do I want to be bullish? Yes, of course. I want to be bullish. Like I want to see this move back up and everything. You know, am I bearish right now just for the sake of my algo being short? No, of course not. My algo is a side thing. It just trades a portion of my portfolio. I don't in general give a shit about what my algo is doing. Of course, I care that it's working properly and making people money in the long run. But overall, I'm not basing my decision off of my algo. However, normally when I counter trade it, I lose. So there is that. But at the end of the day, I mean, there's no contest that this is some kind of a flag here. Obviously, that would be bearish. The price action is really weak. Every time we move to the top side, it's getting heavily sold into, which tells me that, you know, while this is moving higher and there's buyers here that are buying these dips or whatever, it's just really hard for me to be ultra bullish on this, just invalidating, because again, like we saw back there, the examples that I just showed you, normally when you see a move like this, if you're looking at some kind of a reversal, you get a V shape, a very quick bounce and some kind of a V-shaped recovery to be testing highs. And we just haven't seen that. Instead, we broke down and we barely moved and now we're flagging. That doesn't really instill too much confidence of invalidating a giant 4-hour bear flag. You know, and just seeing, I mean, we could BART, maybe we get a BART, but I mean, recently in the past year or two, that's actually been pretty rare because Bitcoin is more liquid now. There's more people trading it. There's more money in the markets doing it. What you're looking at is called a dropping bottom. Yes, that is correct. Normally there's more down to go with this, but this is Bitcoin. So of course, traditional chart. Yeah, exactly. And that's kind of what I was getting at here. Like traditional charting, it really only goes so far. If there was a very clear 4-hour flag here on like on legacy or on like a Forex market, then like 100% you can guarantee that's probably going to go down because there's trillions of dollars of daily volume in those kinds of assets. You know, in Bitcoin, it's like $250 million or $500 million or whatever daily volume. Maybe it's more, I don't know, don't quote me on that, but it's not nearly as much as legacy and Forex for sure. So in general, classical patterns like this, or, you know, like head and shoulders patterns, you guys know, I love head and shoulders patterns. It's like my favorite thing to trade. While in legacy markets, Bishop's totally right. In legacy markets, those are a lot more reliable, usually 65-75% reliable. In crypto, oh, Jesus. I mean, it's got all of its own fundamentals. Rules don't really apply. It's a lot less liquid. Anything can fucking happen. It's a gambler's paradise. And classical charting patterns like this, while they're good and they're still good to identify and take them into account, they're definitely not 65 or 75% reliable. They're more like 45 or 50. Like we see triangles, you know, like this, you know, invalidate, you know, all the time and do one of these and then go back up, you know, like, and just see some crazy fuckery because liquidity grabs and a lot of manipulation and stuff like that. But yeah, I agree again with Bishop is like really on point. Dropping CVD on spot is the hell is not good. Right? I mean, like this looks like doo-doo right here overall. Like if you look at the 1 hour, I mean, like oof, right? Very big oof. I mean, if you look at this long term, it's just like, obviously it's been like steadily grinding down, you know, with the price, regardless of these hops. In general, it's been grinding downwards. So very, very interesting. I mean, I definitely take this as, you know, I don't know, we'll have to see, what is this? This was our low for this. Nope, for here, basically. This candle close. Okay, so this low caused that peak because it's calculated by close. So here's that low. And we have an equal, okay, so that's another like, that's like called exaggerated divergence. and you've got an equal low between here and where is it? I guess this wick here that we basically just had. While you've got a higher low in price, you've got an equal low. So there is that we can take into account, but it's very. I'm more confident on this actually being some kind of a channel because of how well this upper channel line has been respected, especially during the volatility of the FOMC and the subsequent press conference. I mean, just looking on this 15-minute chart, I mean, look at how well this was respected. Like, yeah, we wicked above, closed above, immediately closed back below, boom, came back down, tested the bottom of the channel twice. Couldn't make a bullish engulfing. Now we're kind of recovering a little bit from that move up. Very, very volatile today. Very volatile. The OBV during all of this is like super all over the place. Momentum is all jacked up. Like, look how jacked up that MACD line is. It's like it's not like a smooth arc. It's like some jacked up. I don't know. It looks all weird, yeah, but typical with FOMC, right? Like normally that's pretty typical. Just seeing like it fucks up your indicators, right? And things just need to calm down over time. So this is exactly why I stream and do Beers and Bitcoin on Friday nights as well, so that we can kind of like, especially on an FOMC week, it's like, okay, let the markets cool down. As I said, on our economic calendar, we still have a lot of stuff that's going on. Jerome Powell mentioned this too. We've got continuing jobless claims. We've got personal core consumptions, durable goods, initial, jobless claims. And then the next day after that on Friday, we've got the employment cost index, core consumption expenditures, personal income. Like there's a lot of really important numbers that are coming out this Friday, which is why it was kind of when it falls like that, it's kind of shitty to have that happen after like 2 days after an FOMC meeting, because like now, since those numbers that we're getting the same week as the FOMC meeting, what now becomes very important isn't necessarily the next meeting, it's the FOMC minutes that we'll get in 3 weeks. That's when they take what their whole thing was, like his written statement, and what everybody agreed on at the meeting before they make the announcement, release the numbers. What that FOMC minutes is all of that information, and it also includes any changes to what they had already decided. So I feel like the FOMC minutes is probably going to be a little more important than it usually is when it comes out. If you guys want a date on that, let me see if I can find it here. Calendar FOMC minutes. So it would be 3 weeks. So it would be here we go. So it would be Wednesday. Hike next meeting. Only 3 people voted, but everybody said yes. That's interesting. Very small sample size, but interesting nonetheless. So FOMC minutes for this meeting that we had today is going to come out at 2 p.m. this time in 3 weeks from now. So August 16th. So obviously I'll bring that back up later. It's not a date that you have to memorize or anything. However, I feel like that's going to play a pretty large role considering the numbers and the earnings reports too that we're going to be seeing before then. So still an exciting week nonetheless. Good meeting, lots of volatility in here, especially if you're small time frame scalper. There was definitely opportunities in here. I just haven't really been scalping these the more recent meetings when he's been slowing down the pace of these hikes, just because it's too unpredictable. You don't know if he's going to pause or do a hawkish pause, and just like skip a meeting. It's very difficult to get a read on what Powell is actually trying to be doing here. So for the most part, I've kind of been staying away from large, scalping on smaller timeframes during FOMC meetings. During the height of it, when it was like full bore hiking, it was a lot easier to get a read that, okay, it's another hike. We're going to get some crazy volatility today. But now as, it's becoming a lot less predictable on what they're going to physically decide based on the numbers. I've been definitely scaling back on scalping those FOMC events and stuff. I'm probably going to get back to that, doing that live. I might stick more with like Forex pairings and maybe just show it to you guys on TradingView and have my TradingView account like linked up to Owanda or Interactive Brokers, and just doing it that way, and then like scalping Forex during the meeting. Because there's still obviously a lot of activity there as well, because all of that stuff is, obviously going to be based on, is going to be based on the dollar. The hell is the dollar? Here it is. It's going to be based on the dollar. So if we really zoom out on the dollar, just absolute like textbook scenario here. I mean, that this was really good. And I posted this the other day and I was like, bearish retest of the breakdown. Sure enough, really nice bearish retest here. And in my opinion, that's, while it might not be confirmation of a continuation, we certainly had a strong reaction off that trend line. So very, very, very nice here. Obviously, this is the daily chart. But yeah, in general, 199, between 99 and 100, that's going to be major, 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 major support, for the dollar. We would have to see some very significant, something very significant, like something very bullish and fundamentally bullish, like a white swan, I guess is what it's called, for this to be dropping much lower than 99 and be retesting this trend line that goes way back to 2017. Now, while that's possible, I'm not saying it's impossible. In fact, right now, based on this structure and how it looks right at this moment, I would say that's likely. But obviously, we know anything can happen. We're also going to be moving into an election year, which causes even more uncertainty because of the political aspect that's involved with it. We've still got this administration just spending, we just raised the debt ceiling, bam, they spend another $1 trillion like immediately. It's just really out of control. This administration has no plans on stopping any spending or constricting it or anything, which I believe to be a problem. I think that is going to fundamentally make Jerome Powell's job a lot harder because Congress is just doing whatever the fuck. So not good there. That is probably one of the biggest issues. And I think one of the biggest question marks is going to be obviously what's going to be happening going into primaries. The fact that, we're heading into an election year, that's all going to be playing a very big role, in everything that's going to be going on. So very hard read on Jerome Powell in general. There was a lot better set of questions that were asked this time versus, last time and everything. And, we'll just kind of have to, take it as it comes as he's, now just taking it as it comes. He's not in full bore, we're going to hike every single meeting mode now. He's more in like, okay, we're going to hike every other meeting or every 2 meetings. Maybe he does 2 back to back, and he hikes again in, September or whatever. We'll have to, figure out what is going to be going on. But again, a lot of this is going to be based on the numbers that are going to be coming out this week. So the weekly roundup that I do, make sure that you subscribe to the channel, make sure that you like the videos and stuff. I appreciate all of the engagement and everything. So that's all going to happen. Hold on one second. Somebody's knocking on my door. Some jokers from freaking Verizon that were trying to get me switch away from Google Fiber or something like, well, how much do you pay for that? $70 a month? It's like, yeah, of course I know that you know how much it costs. The commercials are everywhere. I just moved in here. I'm not switching my internet. Sorry, bro. Especially not to Verizon. They like to give you like oh yeah, we'll give it to you for $50 a month. But what they don't tell you is that you're signing a contract for like literally a year. And then they jack the price up to like $150 after your contract expires, because it was a promotional thing. So sorry, I don't want to be rude. I'm in a meeting, got to go, bye. And I just shut the door. Sorry, homies. I used to have Verizon for my cell phones and it was a terrible experience. Never going back to Verizon ever. T-Mobile for cell phone service all the way. Okay. So damn, I like lost my train of thought, which kind of sucks. But yeah, per my triangle, if this ends up playing out, yeah, like coming back down here to be retesting like 97 or so, 100%. That's if you go to the weekly chart here, that's what this triangle is based off of, right? So we had another one down here that we never retested. Okay, but we also, didn't do what we were doing now. So the one that I have on the daily chart is based off of different lines here. So we'll have to see what kind of ends up going on. But in general, that would probably be my target as well. Good call on that. Anyhow, shit, I forgot what else I was going to be saying. What else? What's going on with our liquidation levels right here? We've just been really bouncing around, very indecisive what the price wants to do. It looks like we just came up and liquidated a short here. We got this bear right here for about 100,000, 96,000. There's another one above us for 34 million at 29,419. That might possibly get swept. I don't know. We might end up chopping around in here. We might not end up resolving and seeing which side gets swept first until we get a lot of those numbers tomorrow. So that's another possibility. We might just continue to move sideways here, which is not really something that I want to be seeing. But no one swatted me. No, absolutely not. That is not a thing. I try to be a good boy. That's not really a thing. Is the FANG hurting for this? So it looks like the FANG index is still. Looks like the FANG index is still having trouble with this main area of resistance here. So that's interesting. Oil's been up. Nat gas broke out from this really large consolidation range that it was in, broke the trend line, kind of made a flag here. Like if you ignore this trend line and you let it end about here, or what, let me turn this stupid magnet off. If you let that trend line end here, yeah. So kind of a bull flag here, in my opinion. Again, classical charting, it's going to work a lot better on assets like this. Now, what I don't like to see is this really like nasty stagnation here. While this could just be a smaller time frame consolidation before a move up, we'll have to see. But in general, this would be the level that I'm looking at, which is just about $3, right? So like this order block, there was also a small gap in here, and this candle filled it. So this order block in here at about $3 is what I would be looking at. In terms of top side, if you're trying to get into this. Let's see here. Not really too much else that I want to get into here. 2 years up. 1 year is still up. Yeah, all of these smaller time frame bonds are like literally just pushing all-time highs. 30-year has not been able to break out of this successfully yet. And that's the bond yield. So let me know if there's some other charts that you guys want to go over real quickly. If not, I'm probably going to go ahead and end the stream here in just a minute. I've got some things that I need to do. Got some posts that I need to make. I also have a meeting at 7 o'clock tonight. So just a little tidbit. I'm actually going to be coming out with a version of the VENOM algo for Ethereum as well. And when I do that, everybody is going to get grandfathered, including whatever promotions you guys are using for that product. I'm going to be, I plan on dropping the price by probably 10 or 15 bucks for the Bitcoin version of it. And then I will release the Ethereum version for the same amount as well. And all of those promos will still apply. So if you're using like a 50% off for 2 months promo or whatever, and you get it just before I drop the price and release the algo, like you'll be taken care of basically. So planning on doing that. I'm also working on a version of it for AVAX as well. And I'm going to start doing some altcoins. So kind of the unofficial announcement of like the first alt pairing that I'm working on optimizing the strategy for as well. All of these are going to be scalpers. All of them are going to trade on and operate on the 5-minute, unless I find something that just like blows that out of the water completely. Like if I bump the time frame to 15 minutes instead, and it just totally outperforms like by like a very large margin, that's obviously when I would make that adjustment. But I'm not really too much in the habit anymore of making algos that operate on the 1 hour or the 4 hour or the 1 day time frame. People like to see it trade. They want to see it actively trading. They like getting the notifications. They like the scalpers. At the end of the day, that's what people want. That's what sells. So, I'm just going to be playing into that basically. You want to see it trading often, you know what I mean? Which is good. So again, all the links are down in the description below. I'm not seeing any comments about any chart requests or anything like that. So I'm probably going to go ahead and pretty much head out of here. But I really appreciate you guys tuning in. It was a really awesome FOMC meeting. Definitely a lot of stuff happened. Definitely a lot of information and everything. And yeah, I'm going to be streaming again on Friday for Beers and Bitcoin, 8 p.m. Central, 9 p.m. Eastern. So make sure that you guys like and subscribe. Check the links in the description below. And until next time, happy trading.